Next question, whether as per Modigan and Miller approach, value of the firm can be increased by adjusting dividend payment? That is the question. I want you to answer this question in the chat box. So friends, we understand that say as per approach, irrespective of the payment of dividend, out of 5 lakh rupees of the profit, if at all you do not pay anything or you pay entire earning in form of dividend, we have observed that the value of the firm is going to remain same. That is an amount of like 20 lakhs, 20 lakhs, 20 lakhs. Again, we saw a question in which no dividend, value of the firm is 50 lakhs. If dividend is 8, even in that case, value of the firm is 50 lakhs. It means that say approach has a conclusion that irrespective of the payment of dividend, whether you pay entire earning in form of dividend or you pay partial earning in form of dividend, in either of the case, overall value of the firm is going to remain same. That is the conclusion that approach has made. So please write an answer to the question. As per approach, comma, value of firm will remain same irrespective of payment of equity dividend. So we understand that say whatever may be the amount of the equity dividend payment, always the overall value of the firm is going to remain same. That is the conclusion that say the approach has given. So this is the answer that we have to write from examination point of view. Now we are discussing say a kind of reasoning or a kind of explanation say additionally which approach has given. Now friends, understanding a kind of reasoning which the approach has given is something like this. To explain that, say just take a small example like this. Suppose a company is formed with an equity share capital of 5 lakhs. The company has issued 50,000 shares at the rate of rupees 10. That 5 lakh rupees is invested in the business. At the end of the first year, the company made a profit of rupees 1 lakh. So there is reserves and surplus of 1 lakh and the profit of the company would be 1 lakh. So the assets of the company increases from 5 lakh to 6 lakhs. Okay, 5 plus 1, that is 6 lakhs. Let us think about a situation wherein the dividend per share is 0. No, that is nothing is paid in form of dividend. Then we can say that the market price of the share would be like 6 lakh rupees is the total assets value, the 6 lakhs. Number of shares are 50,000. So what will happen? Use your calculator. 6 lakhs upon 50,000. The market price of the equity share will be rupees 12. So in total, wealth of the shareholder will be rupees 12. That is 0 plus 12, that is 12. Suppose the dividend is paid to the equity shareholder is, let us say, 70 paise per share. Okay, 70 paise is paid. Use your calculator. 50,000 into 0.7 means 35,000 is paid. Okay. So in that case, this will reduce to 65,000. And the reserves and surplus will also reduce to 65,000. In that case, can we say that the price of equity share would be 5 lakh rupees of the initial investment plus 65,000 rupees of the earning, 5,65,000 divided by 50,000 shares. So it will be 11 rupee 30 paise. So overall wealth will be again rupees 12 only. Instead of 70 paise, suppose so the company has paid dividend of rupees 1 rupee 20 paise. I am taking randomly a value 1 rupee 20 paise. Then 50,000 shares into 1.2. 60,000 is paid in form of equity dividend. Yes. So from 1 lakh 60,000 is paid. So can we say that 40,000 is the remaining cash balance or remaining, that is the assets, and over here so again this will also reduce to 40,000 because 1 rupee 20 paise is paid in form of dividend. So 1.2 into 50,000, 60,000 is paid. Now this 5 lakh plus 40,000, that is the assets of the company upon 50,000 shares. So the price for equity share would be 10.8. So overall wealth is again 12 rupees. Approach has a kind of conclusion, or approach has a kind of reasoning that whenever you make payment of equity dividend, at that time wealth of the equity shareholder reduces in form of market price of the equity share. So if at all you pay dividend, then the price of the share is proportionately reduced. However, the overall wealth of the shareholder will remain same. Why? Because we understand that so the overall wealth of the shareholder is consisting of two components. One is the dividend income and another is the market price of the share. If at all you pay 2 rupees in form of dividend, okay, 2 rupees is paid. So in that case, this cash balance is 0. Reserves and surplus will also be 0. This will be 10 itself. Okay, this 10 itself. And overall wealth is again 12 rupees. So whether you pay dividend or not, overall wealth of the shareholder is remaining same. That is the kind of conclusion which approach has given. So let an answer. As per approach, comma, whenever a company is paying equity dividend, comma, then market price of equity share reduces proportionately. Full stop. So overall wealth of shareholders will always remain same. Further with paragraph breakdown, we can say that as per approach, decision about equity dividend is not going to increase wealth of equity shareholder. That is what we understand. Friends, over here Just I can give you some example like this. If at all I am considering, say, to improve my quality of teaching with students, then in that case, where I should focus? I should focus on the explanation. I should focus on my quality of the examples. I should focus on the study material which I prepare. Like that, so these are the things. Say I try to connect the things, and with that, say I should be giving you explanation. All those things are going to make me as like the better teacher, and with that, I'll be able to give you, say, some better services. Whether this is of the blue color or black color is not going to make any difference. Whether this is of the blue color or like any other color, as a student, you never even notice that. What I want to tell you is that the approach says that, say, you have an intention to increase the wealth of the equity shareholder. Yes, you want to say, if at all you want to increase wealth of the equity shareholders, then in that case you should not focus on the equity dividend payment, because whatever the equity dividend payment that you make, overall wealth is going to remain same. That is what the approach says.